This is our Forex blog for October 20th, 2011. And like most days, we really want to sell the weak currencies versus the strong and buy the strong versus the weak. The dollar and yen were both weak yesterday, but it rallied, later in the day. The yen, the weekly and monthly trend switched back at around 2 o'clock yesterday, and it was pretty much strong until confirmed here at 4. Anytime you have a lot of weakness followed by very little strength, usually that weakness returns. Just when you have a lot of strength followed by very little weakness, especially if the longer term time frame trends match the real time bar by bar trend strength, usually that trend continues. So between the yen and the dollar, the yen was the only one that was up on all time frames. The weekly trend is still slightly down last night in the dollar. You'd want to trade the strong yen versus whatever the weakest pair is. Last night around that time, the Australian was weak, the euro was weak. Let's scroll back and see if the pound was also weak. The pound wasn't weak at that time. Really, the euro wasn't that weak. And the Australian was the weakest. So last night, up until maybe about 2 o'clock, after 2 o'clock, some weakness comes into the yen, followed by a lot of strength. Weakness again, less strength. So really the uptrend was confirmed over right here when it went weak again right here. The last move was incredibly intense to the downside, followed by a counter trend move that had no intensity at all, and usually that's the direction it goes to. So you want to trade the euro yen to the downside until about 4 right here. You can see a lot of weakness, a little bit of strength, less weakness. The downtrend's probably over. Let's first look at the Australian yen now. And you can see this currency is underneath the hourly, and a lot of times currencies, after they've fallen a lot, they'll make at least a 2-wave counter trend move. So here's your first wave. The market went right to the 1.618 fib level. A lot of times you have Fibonacci clusters, the entire wave or entire move down from here to here. Let's make that a little bit thicker so we can spot it. So we have the 38% retracement of the entire move down, followed by a 2-wave counter trend move, and it was just a few pips underneath, maybe about 10 or 12 pips from the hourly moving average, which oftentimes is a resistance area when the market's underneath it. So this was a really high probability place to go short. We also have a narrow range pattern right here. This 4-hour period preceding right here was the smallest volatility in the previous 7 bars, over the previous 7 4-hour bars. And so over the last 28 hours, this moved the least amount of pips up. So you had a very slow grinding move up without that much intensity. Very high probability trade. You can see it fell from 75 almost all the way down here. It fell almost 100 pips. So if you miss that trade, you can bar by bar range bars for this pair. Weak Australian, strong yen. And let's scroll this one back so we can see it. Coming up to midnight, you have a beautiful counter trend move. You can use our intelligent trailing stops on the range bars. Nice little 20-25 pip move here, 10 pip move, and another 10 pips. And usually when it gets to the lower containment band, that's oftentimes where it stalls. If you got short again here, you can see you got chopped up a little bit right here. And once it makes a higher high, it could return back to the hourly where it will find resistance. Right above there you have also resistance. It has to get above 78.60 really to go into an uptrend. You might have sold this again right here, pretty much a break even. And usually resistance areas once broken tend to become support. Your usually best bet is to wait for a pullback. This one is about to give you a pullback right here. Once you see a lot of strength like that and it breaks from underneath above the hourly, usually that trend will continue. So if you want to go long right there, you had a small loss. And you can see it's strong. A lot of times you want to put your stop underneath the previous swing, but this kind of is going sideways right here. Pretty choppy move up here at the highs. You might have also bought the breakout from underneath to above the hourly right here. Later in the day, the Australian was no longer weak. You can see that went strong about 3:30. Some of the other currencies you could have also traded last night. When the yen went weak again, the dollar is more consistently weak across time frames until about 5:30 right here. So the dollar was weak. You could have traded that against the strong Swiss. Um, at 3:30 to 6, we have relatively strong New Zealand. Same thing with the Australian. So pretty much from 8:30, or I'm sorry, 3:30, you could be looking for buys in the Australian dollar. Here's 3:30. You can see this one made a two-wave move up. Let's look at this one on the range bar as well. $3.30, this one became really strong. Notice anytime you see a move up with a lot of strength, the pullback has very little weakness. Most of the time that trend's going to continue. We have lots of resistance right here. Previous day's high, or I mean low in this case, weekly pivot, hourly moving average. Once it breaks above there, and if you're a really aggressive trader, you might have went long right here. It had every opportunity to go above there. This resistance area got hit twice. The third time usually busts through, and you can see our trailing stop pretty much caught almost every pip in there, out at 87. So whether you got in here at 28, you have about a 60 pip move, or if you're a really aggressive trader, once it pulled back and kind of went sideways here and broke out right here, you might have got into a little bit early at 12 versus 24. And that way, if it found resistance here, you could have got out of that with a small profit. The Swiss also was relatively strong. Unfortunately, the weekly and monthly trend is down in this. But again, anytime you see a lot of weakness, or I mean strength in this case, followed by very little weakness, usually that trend continues. Just like when you have a lot of weakness, followed by very little amount of strength that lasts less time than the weakness, usually that weakness will come back, especially when all the time frames line up. So another pair you could have looked to buy last night was the dollar Swiss. I'm sorry, not buy, sell, from about 4:30 on. Notice how it broke from above to below the hourly moving average. It was above the previous day's high and broke down underneath there. And then you have a very low risk, high probability trade. 10-day moving averages here, weekly pivot, lots of resistance areas. Once it breaks underneath them, they become resistance, and this is a retest right at the hourly with about 30% less strength than there was weakness. So you go short, and notice how our intelligent trailing stop kept you in for the entire move down. Most of the time when it goes to or below the lower white containment bands, that's usually where the price stalls and reverses. So you have the previous day's low right here. It went underneath there, then came back above. You might have wanted to get out of your trade here at 52 because it's very likely to go up another 8 pips and stop you out. You might as well capture that remaining 8 pips.